A friend of mine once told me how proud he is to hit that magic six figure. He had worked late nights, sacrificed his weekends, and finally crossed that magic six figure of £100,000 a year. But when the pay slip comes in, he get only 68,000 out of £100,000. He was saying, I feel I made it, but it doesn't look right to me. And that time I told him the way you earn money is matters as how much money you earn. So let me explain it to you what that mean is. Employees get taxed at source, however, wealthy person does not take a salary. The income flows through the right structures. Companies, trust, foundations, instead of salaries, they take a dividends. Instead of bonus, they take a capital gain. And in the right jurisdiction, they invest in on which the effective tax rate sometime is reduced to 0%. I know it's hit differently, but that's the reality of this world. So on average around the world, if you earn your money as an employee, you will pay roughly 40% tax. If you are a specialist, self-employed entrepreneur with certificates, lessons, certain skills, you would actually pay closer to 60% once you add everything in. Let's say if you are operating your doctor practice, a consultancy firm, or small business, but as a big business owner, you can reduce your effective tax rate to around 20 to 25%. And if you become a professional investor, a true entrepreneur, you can bring that rate down to 10%, even 0% in right structure. But here is the problem. Of course, if you are earning £100,000 a year, you are one of the top 3% people in the UK. And of course, after taxes and national insurance contribution, you only get roughly £68,000 out of 100k. Now imagine earning that same six figure as a business owner. Suddenly you can write off expenses, delayed test gadget you bought for your business, the trip abroad that doubles as a business meetings. You keep more of what you earn. It means all of these legal expenses which you incur for your business purposes you can deduct. However, for employee, there's very less expenses which you can deduct from your salary. And investors go one step further. They don't trade time for money. However, they let money to work for them. Like I said previously, instead of salaries, they take dividends. Instead of bonuses, they take capital gains. And in many cases and in many jurisdictions, they are taxed at lower rate than employee. That's why wealthiest people in the world, they are focused on owning assets, not earning wages. And here's the truth. The tax system rewards risk-taking, ownership, and investments. It's not necessarily fair, but it's how the rules are written. Employees provide stability to the economy, but business owners and investors are seen as the drivers of growth. So the system gives them incentives. The question is, where do you want to sit on a ladder? Trading time for money or building something that works for you? So drop an answer in a comment section and then we will work it out together. As always, hand ahead, salute until the next video.